The car company that was once on the brink of bankruptcy is now smashing stock records. Tesla just hit its highest valuation in 3 years. But is this a sign of true dominance, or is the stock about to crash? With massive leaps in AI, autonomous driving, and even humanoid robots, Tesla's future is looking complicated. I'm saying this because Tesla's stock has been on an absolute tear lately, defying all expectations and breaking records. After years of being stuck in a rut, the stock has exploded, up more than 70% since November 2024. That's not just a rally. It's an all-out surge that's got Wall Street scrambling to rework their predictions. Analysts who had written Tesla off or pegged it as a company with a bloated valuation are now sitting up straight, rethinking everything they thought they knew. And here's the kicker. Many of them are still not convinced this is sustainable. Some think Tesla's going to hit a $3 trillion valuation, which, let's be honest, seems insane when you consider just a few years ago, people were questioning if it could even stay afloat. So, what changed? Well, Tesla is not just a car company anymore. It's a tech juggernaut, with AI, autonomous driving, and even humanoid robots driving its future. It's the perfect storm for a stock price explosion, but is it all hype? Or is Tesla really on the verge of something huge? Now, let's talk about Tesla's full self-driving FSD tech. This is where things get really interesting. According to Tesla, their FSD software made 1,000 times more critical interventions in 2020, making it not just a self-driving car, but a game-changing force in the autonomous vehicle race. Think about that for a second. We're talking about software that could potentially make our cars safer, smarter, and more capable than any human driver. That kind of breakthrough has people seriously rethinking Tesla's place in the future of transportation. If they can nail it, Tesla won't just be a car company anymore. It'll be a leader in artificial intelligence and autonomous driving technology. Elon Musk has been telling us for years that the future of driving is driverless, and the pressure is really on for 2025 to be the year Tesla cracks it wide open. Ride-hailing services powered by Tesla's autonomous cars are set to roll out in states like California and Texas. And if these systems actually work the way Musk promises, we could be looking at a massive shakeup in the way people get around. We're talking about the kind of change that could disrupt the entire transportation industry. But there's a major if hanging over all this. Will it be ready in time? And will it actually work the way it's supposed to? That leads us to the regulatory side of things. Musk's connections with powerful political figures, like President-elect Donald Trump, might just give Tesla the boost it needs to sidestep any red tape that could slow them down. If new policies push through in 2025 that favor self-driving tech, especially with Musk's influence, Tesla could find itself with a huge competitive advantage. The regulatory environment is key here. If Tesla gets the green light, there's nothing stopping it from taking over the self-driving game. But let's pause for a second. Just because something sounds like the future doesn't mean the public is all in. Yes, there's a lot of excitement around Tesla's FSD capabilities, but is it practical? There are still concerns about the technology's reliability and whether people are really ready to trust a computer to drive them around. Tesla's had its fair share of high-profile accidents involving FSD, and even though they've made huge strides, the public's skepticism isn't going away overnight. Tesla is even setting its sights on an entirely new frontier: artificial intelligence and robotics. Musk has been vocal about his grand vision for Tesla's Optimus humanoid robot, saying that it will eventually outshine the company's electric vehicles. As ambitious as that sounds, it's far from a pie-in-the-sky dream. Tesla's progress on Optimus has been real, with the robot already showing signs of significant development. Moreover, Citigroup, a major global financial services firm, has pegged the humanoid robotics market to hit $1 trillion by 2040. Let that sink in for a moment. $1 trillion market. And Tesla, despite its ups and downs in the automotive world, is positioning itself to take a massive chunk of that market share. The company's efforts are not limited to the Optimus robot alone either. Tesla is betting big on AI, using it not only to power its cars, but to advance robotics and automation, in ways that no one else is currently doing at the scale that Tesla can. The idea of robots walking among us, performing jobs and tasks typically done by humans, isn't science fiction anymore. It's a tangible reality that Tesla is working toward. Tesla will need to not just build robots, but change the way people think about robotics. Optimus could do everything from household chores to more complex tasks, like working in factories or warehouses. If Tesla gets it right, this could be the next big revolution in automation. But there's a darker side to this potential revolution, and it's not just about creating robots that can help us with daily tasks. It's about the jobs that could be replaced along the way. Imagine the industries and labor markets that could be disrupted when robots like Optimus start replacing human workers. We're talking about everything from delivery drivers to warehouse staff and even certain office jobs. The labor market will face a serious shakeup as millions of jobs could be at risk. Looking at Tesla's financials, there's reason to believe that the company is starting to get its act together after some rough patches. After a tough period of low margins and high costs, Tesla's third-quarter earnings showed an 8% revenue boost, bringing a sense of optimism back to the company. Tesla may be leading the global EV market, but its market share is slipping. In 2024, Tesla's share of global EV sales dipped to 17%, a noticeable decline as new entrants like Rivian, Lucid Motors, and traditional automakers ramp up their own electric vehicle offerings. While Tesla's dominance is still impressive, it's clear that the competition is catching up fast. One of the ways Tesla is trying to stay ahead is by slashing prices. In an attempt to make its EVs more accessible to a wider audience, the company has significantly cut prices across its lineup. While that's great for consumers, it's been a double-edged sword for Tesla's bottom line. Price cuts have hurt profit margins, and that's been a major concern for investors. However, Tesla seems to have found a bit of balance in 2024. The company's gross margin has expanded better than expected, showing that the aggressive price cuts may have been the right move in the long run. While margins are still lower than they used to be, this improvement signals that Tesla might be able to weather the storm of competition and keep its financials on track. That's where things get tricky. Tesla's valuation, currently sitting at 180 times its earnings, is raising some serious red flags among analysts. For reference, the average price to earnings (PEE) ratio for the S&P 500 is around 20. So, Tesla's valuation is extraordinarily high, and many analysts are questioning whether it can justify this kind of valuation with its current financials. Even with the promising signs of profitability, the company's stock price is considered overinflated by many, especially when you factor in the competition that's rising up to challenge Tesla's dominance. However, there's a flip side. Critics argue that Tesla's valuation, currently sitting at 180 times its earnings, makes it overly expensive and risks a major pullback. With traditional automakers ramping up their EV efforts, Tesla's dominance is no longer guaranteed, especially as competitors catch up in electric vehicle tech and autonomous driving. While Tesla's electric vehicles have been the headline act, the company's energy business could soon steal the show. Its solar products and energy storage solutions, particularly with the Powerwall and solar roofs, are quietly growing. Tesla's push into the energy sector is no small move, and some analysts believe this market could eventually surpass its automotive division. However, the competition is intensifying. Companies like Rivian, Lucid, and traditional energy giants are pushing into this space, aiming to disrupt Tesla's lead. Tesla might have the edge now, but with growing global demand for renewable energy, it's far from guaranteed that the company will maintain its dominant position. Tesla's long-term prospects hinge on its ability to balance its electric vehicle sales with its expanding energy business. While its cars have propelled the company into the limelight, the potential of its energy solutions offers an even larger growth opportunity. As the world shifts toward renewable energy, Tesla could position itself as a leader not just in EVs but in energy management, with the possibility of its energy segment eventually outpacing its automotive sales. But with increasing competition on both fronts, the future remains uncertain. Tesla is on the edge of either becoming the world's most valuable company or facing a reality check. Stay tuned.